What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did pull back across the board in the indices, but we're still above the breakout levels and we're still holding above support. Does this rally have more legs or are we coming back down to lower prices? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So first up, there will be a quick announcement is that I will not be making any YouTube episodes for the next couple of days and I will be back on Monday back to normal operations. So in my absence over the next couple of days, there's some very critical levels you just need to be paying attention to. And on SPY, that will be the support level breakout at 408 and our 20 simple moving average down here right around 402. You can see with today's price action that SPY did fill that gap and that level did act as support and we did close back over the breakout level yet again. So the bulls are still out there buying the dip and the bears are still waiting for higher prices before they step in and try to drive prices lower aggressively. So the next leg higher in SPY that we will likely see a lot of bears waiting at is still up here at 420. And if we do see some type of breakout above that level, it will likely trigger a short squeeze and likely a FOMO rally, and we could see SPY getting all the way up there to 430. 430 will be an extremely critical level and we will likely need some sizable pullback before we can go any higher. But we cannot rule out the possibility that the bulls are not done pushing in this counter trend rally. Remember, we're calling this a counter trend rally and a larger degree downtrend until we see higher highs and higher lows on the daily chart. And even though we do have higher highs and higher lows on smaller time frames, we need to see some type of significant pullback, which could be what we're currently getting, and we need to see the bulls stepping up, buying the dip, and driving prices to another higher high, and then we can start to say we're getting a bull trend on this daily chart and reversing the bear trend. You can already see the bulls are doing a dent in the bear trend because we do have a positively sloping 5 EMA and a positively sloping 13 EMA, and our 20 simple moving average is flattening out and it is no longer negatively sloping as aggressively. So the bulls are starting to put a dent in some of that bearish momentum, and if this momentum can carry over to weekly charts, we could see some type of rally that's sustainable for at least a couple of months. So just to recap, the critical levels on SPY you need to pay attention to are 408 and 402. And as long as we are above these support levels, the bulls are still in control. However, if the bears can drive SPY below 402, you are looking for this extremely critical support down here, which is now right around 394 because it is a positive slope. And if we break below that level, we are likely going to the next leg lower, which is still down there at 376 to 370. So watch that very critical support zone, because if the bears can drive the bulls out of those areas and we don't see enough buyers at those levels, we could still go down for a brand new next leg lower. So you cannot rule it out completely. However, in the short term, I would respect the fact that we are in a bull trend, especially if you're looking at 1 hour charts. So do not completely write off the possibility that the bulls are trying to push to higher prices before we see any sizable pullback. On the NASDAQ 100 triple Qs, we were down 0.74% and the bulls are still holding above that breakout level right around 306, and we closed right at that level at the penny. So the critical support levels on the triple Qs will be this level at 306 and our 20 simple moving average right around 300, which will also fill the gap below. So if we break down below 306, you're looking for the next critical support at 300. And as long as the bulls can stay above 300, they do have a shot to get up here to higher resistance levels at 318 and 330. Remember, the bears will not just roll over and give up on this bear trend, so they will be showing up at resistance. So it will take a lot of bullish energy to break through these resistance levels. Now, in the event we break down below 300, it is still likely that we could make that next leg lower down there at 276.8 and 269.5, but we will need to break down through that double bottom support level right around 284. So get a lot more cautious as a bull if we do break below 300, because it's very likely we retest the lows at 284 or make that next leg lower. But as long as we are above 300, you could still stay long for the hopes of higher prices. So watch that critical upside resistance. In the Dow Jones, we were down 0.56%, and the Dow Jones has now rejected resistance at the 50 EMA for 3 days in a row. However, the bulls are still holding price above support at 326. So the next bullish breakout as far as resistance levels will be a close above 333, and then we have that very strong resistance zone that the bears are waiting at 340, and above 340 we have full confirmation of the bullish breakout. If we lose support at 326, watch this 20 simple moving average just below 324, and the gap fill is below at 322. If we break through all of that support zone, we're very likely coming down to retest the lows at 310 and 308, and the next leg lower in the Dow Jones, if we did break below 308, would be down there at 297. So don't write off the bull trend in the short term, wait for the breakdown through critical support, and then you could start preparing for that next leg lower. On the Russell 2000 IWM ETF, we were down 0.57%, and the small caps did close the gap below right around 183, but we did find buyers at that level, and we can still see evidence that the bulls are out there buying the dip with a large tail below the candle. So as long as IWM is sitting above support at 183 and 180, the bulls are still out there, but if we do lose that support zone right around 180 to 183, look for a retest of the low at 175, and below 175, you're looking for the gap fill at 165.7. The next bullish breakout will be a close above 189, and then the bullish breakout is closing back above 191.5, and above that we could start to develop a bull trend and scare the bears away from the small caps and send them into hibernation. So the most critical resistance breakout will be above 191.5, so watch that level very closely. On the ARKK ETF, we were down 3.61%, and ARKK did close back below the 20 simple moving average, so I continue to remind you that this is a very strong bear market, and you should not be getting bullish on the ARK ETFs until they close above 52. We have resistance now at 47 and the previous high right around 45, and it's very likely that we're coming down to retest support at $40 or the low at 39, and more than likely we won't see an end to this bear market until we at least hit this price target at 33.7, with the possibility that we double bottom off the previous low at 35. Do not get bullish until we get these bullish breakouts, which we're still ways away from getting. On the VIX, we were down 1.91%, so we continue to see the VIX getting crushed even on a day that the indices see a slight pullback, so this is more evidence that fear is starting to leave the market. However, the VIX is currently sitting right at support, which is the previous low at 25. So the next bullish development will be the next time the VIX closes below 25 and then below 24. There's a real possibility the VIX bounces off of this level and still breaks back above 30, which will go hand in hand with the next leg lower in the bear market. So watch the VIX closely because this is a very important level that the VIX could break down through to confirm more bullish signals, or we could see a bounce and a confirmation of more volatility. On Bitcoin, we're currently down about 6.7%, with Bitcoin trading just below 30,000, and we can see a very clear rejection on Bitcoin from that resistance zone at 32,000, and we are all the way back down to our support zone at 28 to 29,000. Price action is currently below all the moving averages, but we haven't seen the candle close just yet, and it is still very likely that we hold above this support zone, continue to see buyers at this level, and still get an impulsive rally to 37,000. However, if the support zone does fail at 28,000, you're looking for a retest of the low at 25,000, and below that, you're looking for the price target down here at 20,000. So 28,000 is still your risk level no matter where you're buying Bitcoin at these levels. So continue to watch this very critical support zone and plan your trades around that level. On NVDA stock, we were down 1.89%, and NVIDIA is continuing to pull back, but we're still finding support at the 5 EMA, and we still do have evidence that the bear trend is weakening, and NVIDIA is trying to get up here to about $200. If we get a breakout above 200, the critical resistance to break above is up here at 210, and above 210 will be looking a lot more bullish and will likely go fill those gaps above. Watch downside support at 179, 176, and 161, and if we break below 161, it's still possible we hit that valid price target down here at 150. On Tesla stock, we were down 2.36%, and Tesla did close back below the 20 simple moving average, but we are still above the 5 and the 13 EMA. As you can see, Tesla is rejecting this resistance zone right around 763. So the next bullish breakout will be a close above 163 and will likely retest the 50 EMA at 837. If we fail to hold above the 5 EMA at $730, look for a retest of support at 700, and below 700 we are likely coming all the way back down to retest support at 620. On Apple stock, we were flat on the day, still struggling to break and close above that resistance at 150, and we still do have a gap below to fill down here at 144, but we are currently trading above the 20 simple moving average for 3 days in a row, so there is no doubt that Apple is looking stronger each and every day we get a close above that level. So to the downside, watch Apple support at 147, the gap close at 144, and the support trend line at 142. And if we break through all of that support, you're looking for a retest of the low at 137. And there is still the possibility we need to hit the price target to the downside at 130 before we see the bottom. Now, if Apple does get a bullish close above 150, that will look incredibly bullish. And then we will likely start to see the bulls buying the dip, driving Apple back above 156. And then it will look like Apple is getting the bullish breakout. So it's a very critical resistance zone on Apple at 150 and right around 155 to 156. So those will be your bullish breakouts of confirmation with the price action. On the financial sector, we were down 1.61%, and the financial sector is getting rejected around the 50 EMA, but we are reversing the bear trend day by day. So if the bulls can make a higher low and get a close over the 50 EMA, that will be the bullish breakout that you're waiting for. The industrial sector was down 0.61% and continues to close above the 20 simple moving average. So the next bullish breakout will be the close above the 50 EMA. The healthcare sector was down 1.44%, pulling back after we got the bullish breakout and closing back below the 50 EMA, but still holding up above the 20 simple moving average. Watch for that next breakout above the 50 EMA to confirm the bulls are still buying the dip and we're going back into a bull trend. The energy sector was up 1.63% today, bouncing off the 5 EMA and still below that price target at $90. And if we do get a bullish breakout above 90, the next price target will be all the way up there at 99.6. But we could still be reaching the point where we did reach a potential top and we're due for that correction. So watch the 20 simple moving average as the critical support. So jumping back over to the S&P 500, these are very critical levels for both the bears and the bulls alike, and we are going to know very soon whether the market is going to get a bullish breakout above resistance or fail to form a higher low and go all the way down to form that next leg lower and continue the bear market. Either scenario is completely possible at this point, so make sure your trade plan knows exactly what you're going to do no matter where we go from here. Please don't have a trade plan that only depends on the market moving in one direction. You should know these critical levels and do whatever the price action is confirming. And right now we could either see the price action break out to new highs as the bulls take over, or we're going to see the bears flexing their muscles and sending us down for the next leg lower into this bear market. Do not only depend on one scenario playing out. Follow the price action at these critical levels and make sure you have a plan to act accordingly. Use proper risk management, be patient, and remain disciplined. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.